The following program is rated G. It is suitable for all audiences.
First, going concern.
This, and this makes an assumption that their business will remain in operation, not that kind of operation, but in a business operation.
But first, let us try to understand the word going concern. Going means continuing, and concern means commercial or industrial enterprise, the people who constitute it. And so, from the word itself, going concern means that the business assumes to continue its operation in the future. This continuity of existence assumes that the cost of business assets will be recovered over time by way of profits that are generated by successful operations. The balance sheet values for long-lived assets, such as land, building, and equipment, are being recognized at their actual acquisition cost. Since there is no intention to sell such assets, there is no reason to value them at market value. Thus, change in value should only be used upon the exit of the business. If a business is not a going concern, it means it's gone bankrupt and its assets were liquidated.
The second one is the business entity concept.
The business and its owners are two separate existent entities. Any private and personal incomes and expenses of the owner should not be treated as the incomes and expenses of the business.
The third one is the cost principle.
Principle is also called exchange price. The assumption made by the monetary concept, which would later be discussed, is tied directly to the cost principle, which requires the value of business transactions be recorded at the actual or equivalent cash cost. Example would be a computer equipment that is being used in an office. If the computer is priced 40,000 pesos today, but you were able to purchase it at 37,000 pesos, you must record 37,000 pesos as its cost. And if after a month you were also able to purchase same equipment but in a cheaper price, let's say 34,000 pesos, you should still record the asset in the financial position as its first purchase value, which is 37,000 pesos, as because this was the price that was actually paid for the equipment.
The next one is the monetary measurement.
States that a business should only record an accounting transaction if it can be expressed in terms of money. This means that the focus of accounting transactions is on quantitative information rather than on qualitative information. Thus, a large number of items are never reflected in a company's accounting records, which means that they never appear in its financial statements. the concept that the financial statements of an organization be based on solid evidence. Assets acquired must be verifiable and substantiated by documents such as invoices, vouchers, or official receipts. The intent behind this principle is to keep the management and the accounting department of an entity from producing financial statements that are slanted by opinions
And also,
biases.
accrual basis.
In accounting, there are two bases. First is cash basis, which normally used in BAR. The other one would be accrual basis. So this is the one required to be used in preparing financial statements. The difference of the two is that in cash basis, revenue is being recorded when cash is collected. And same likewise with expenses. It is recorded when you paid cash already. That's why it's called cash basis. It is recorded when the cash is received or collected, and also when it is used to pay for an expense. On the other hand, in accrual basis, revenues are being recorded whether you already collected it or not, as long as you already have rendered a service. And in expense, as long as you already used something, whether already paid or not, it is already recognized as an expense. For example is in Meralco. You'll first use its service or product before paying it, but they will already recognize it as their revenue.
And those are the things about accounting principles. We hope you've learned something about our video. Till next time, bye!
So, masaya na kasi buhay niyo. Yun na!
This video is for educational purpose only, not for commercial purposes.